Hello and welcome again. This is Robert Schein, Managing Director and Partner of Blanke, Schein Wealth Management. Thank you for joining us on our Friday Insights edition. In today's topic, we're going to talk about income, especially in today's world where interest rates are basically a 10-year treasury. If you look at it right behind me, we're about a 1.3% on the 10-year treasury, meaning 1.3% on your money. If you loan somebody, in this case, the U.S. government, you'll get 1.3% per year just by loaning your money. How can you live off of income that you're going to get and receive at 1.3% when inflation is close to 2%, right? So you're going to be losing money. And that's if you're lucky enough to be invested in the 10-year treasury. Most banks right now are not paying our clients anything, right? So clients bring their bank money to Blanke Schein Wealth Management and we put it to work. So in 2021, Robert, where are you guys looking for yield? How are you building portfolios that are creating income streams? And the most important thing is to build a balanced portfolio that's married to your current situation, goals and feelings in life. And that's what we do. We spend a lot of time with that financial plan, and that dictates how we create the asset allocation or the balance, where we put the investments for our clients, meaning stocks, bonds, cash, and all the other facets that we build a portfolio for our clients that produce income, and the durability of that income, the consistency of that income, and more importantly, the increasing of that income over time, because we know inflation is there. And let's be honest, your bills, my bills, they don't go down. Right? Our utility bills don't go down, they just keep going up. And if you're anywhere across the United States right now, I hope you're staying warm, and I understand that there's winter storms. So come out to Palm Springs area right now. We got 70 degrees. Sorry about that. Didn't want to rub it in, but come on out, seriously, because reality is that you're going to want to travel again soon, but you're going to need that income or that portfolio growth to provide for that. So where are we going with this, Rob? Well, with a 10-year treasury right now and in sort of a quick bond lesson, most clients, we look to the bond market, right? So fixed income. And we look beyond just the 10-year treasury because there's investment grade corporates and also municipal bonds. And so we always go investment grade A or better, and we basically ladder a portfolio. And we ladder a portfolio simply because you need income coming in on a monthly basis so we can structure it so it happens that way. But also we have money coming due every year on a go-forward basis. That's called a bond ladder, and that's the I don't know strategy, because you don't know where interest rates are going. Last thing you want to do is basically create a bond portfolio that has the long duration. That's a no-no right now, simply because right now the trend of interest rates are going higher, right? The Federal Reserve is working on reinflating this economy and working on getting growth to happen again. If that happens, the 10-year treasury, as you see this yield, it's going to continue to rise. Now, if you don't remember, I'll refresh our memory. When interest rates rise, bond prices go down. So if you were to buy, let's say, a 10-year treasury, and basically interest rates rise from when you buy it, the price on your statement is going to go down. So you don't want that either. So we have to structure a diversified portfolio that's balanced, that also provides the income for our clients. And we're looking at other different sectors. Now, trust me right now, when markets are volatile, there's a lot of opportunity and dislocation in terms of the price as well as the yield. So let me give an example. We're looking in the energy industry right now, energy sector. That sector at large right now in the equity market is producing at least a 5% yield, or in some individual companies, 6-7% or higher in terms of income. And they're high quality names that have been around for many, many years and will be around for many, many years to come. Even with the energy independence renaissance that's happening, those companies will also be first movers and not just be the dinosaurs that Wall Street sort of says, oh, they're not going to be around. No, they're innovating technology and they're staying ahead of this energy sort of renaissance that we're seeing in America. But in the meantime, there's dividends that could be paid and dislocation of price. Some of these are down 20-30% in terms of the equity valuation. So you've got an inherent value and if you look at Warren Buffett and what he did with his F-13 filing and what Berkshire Hathaway picked up, they bought energy. They also bought banks, and we like banks too. We've been talking about that for quite some time because that sector at large is 2.6% yield, just if you were to buy the banking sector, and as well as the banking sector is also at a discount right now. At least that's our view here at Blanke Schein Wealth Management relative to where they could be, and even the book value on some of these companies. And a lot of these banks could even have yields of 3, 4, 5% respectively on individual banks that we look at and that we like for our clients right now. So you're going to get income while you wait. you're going to get potential price appreciation, as well as if banks have this trend, why banks are performing well year to date. And by the way, those are the two best sort of performing sectors year to date. But if interest rates continue to trend up, banks will now make more money on the net interest margin. Basically, it's a fancy term meaning that they don't pay you for money that you have at the bank, but they're making money on your money based upon the way they borrow. So if interest rates go up, they make more money. They don't have to basically do anything more than just watch interest rates go up. Banking earnings will then result in higher earnings. So essentially, there's a couple of sectors. There's REITs, real estate investment trusts, that are liquid, that are discounted right now, that are again paying 5, 6, 7% respectively. And there's also senior loans that we're looking at. There's also convertibles. And that's another subsector of the bond market that we like. They've run up substantially, but it's a convertible note. Essentially, you're buying a bond of a company or a basket of them, and then the convertible note, the bond is an IOU, but also has a position that it can convert to equity in the company at some point in time in the future, but pay you income while you wait. And essentially, it's a 2-for-1. So you get the appreciation as well as the income if it's purchased correctly. So we're looking at all opportunities, and there's a lot more here at Blanke Schein Wealth Management that we're doing for our clients. Again, if you want to review your current portfolio, we're here for you. But I think we're doing quite well the last couple of years, and our clients are happy. So anything you need, let me know. Take care. And thanks for watching. Have a wonderful 3-day weekend. Stay healthy and safe, and we'll see you again next time.